Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Mr. Felix.
How you doing, buddy?
I'm good. How are you?
Good. How's the weekend? All right?
Good. You?
Pretty good. Got
Nice.
some rest.
Good.
The what we got? So your video was good.
Thank you. I saw yours too. Great too. So we gotta plug them in. Tell everybody to go check it out, watch it. It's a great watch. First, we got the Skillz video analysis, bulls and bears, and you give out a couple of ideas, and then we have the 6 building blocks. You can tell us more about that one.
Yeah. So I mean, look, I did a webinar last week, and I wanted to cut it down. It's about 20 minutes, but I think people are always asking me, how do you approach things? Where does 3 steps fit in? Where does the winning picks fit in? Where does the new options chain fit in? Where does everything fit in? And I wanted to build a framework for people to fully understand and build off themselves. You know, it's not just about Options Geek. It's about what brokerage you might use or how you're going to incorporate different charts and all these different things, other products that people are selling, research products, charting products, social media products, all these different things that you could sort of put in. And I wanted to help people have this framework to build upon. And that's what that video is. So it's a starter video to make sure this is what we're doing. This is how we're presenting it and how we're growing to an idea. An idea can come from anywhere, but ultimately what you're trying to build is this funnel of ideas or this daily process that doesn't have to change every day, but it's this process where things are coming in and how does it all flow together. So I think the video is valuable for people to gain perspective on what they're trying to do and their setup and how they think about things. And so, yeah, I would take a look. I think it's pretty good. I give a couple of good tidbits and pieces of little nuggets that I use that I think everyone can benefit from.
Cool. Awesome.
Now, the weekend story. I mean, this Bitcoin is just going crazy. It's up and down. You know, I read an article. It lost, the crypto coins lost $1 trillion. Is that right? Last week, $1 trillion. It's a lot of money. And you know, it's funny, you know, the market giveth and taketh away, right? It just happens to be that it's the week after taxes. So after everyone has made all this money, has to take some money out to pay their taxes, and then what's left, the market takes, half. It's interesting how it all works. It's also interesting. I mean, if you look at the Bitcoin chart, I don't have it in front of me, but if you look at the Bitcoin chart, kind of looks a little bit like a mountain, right? So, are we on the left side or on the right side of the mountain? I think you got to be asking yourself, and was that the peak? I would say it might be the peak. Might be the peak for a little bit of time. We've now lived through this mountain, right? The mountain, I call it the momentum mountain. We lived through it through the EV names, and you see how much more difficult it is on the right side of the mountain. It's incredibly difficult. The last 3 months, in just in the tape in general, it causes havoc in sectors, industries, all different names. So I don't know. It looks like the right side of the mountain is here, at least for a little bit. Is there another peak left in Bitcoin? For sure. If there is another peak and we go from 60, I think a couple of weeks ago, I said teens. I'm looking for the teens of Bitcoin. Give me 13 to 17. I think that's like going to be a real spot where people literally going to dump it and say, I'm out. And then it's going to hang out there for, do this. It's got to make it dramatic. It's got to basically say, oh yeah, thank God I'm out. And then you got to 6 months later, you got to still thank God you're out. And then all of a sudden it's literally got to explode again. That could happen. Or it could be now. Maybe now's the 30,000 up until, whatever. But I suspect that we're on this side of the mountain in Bitcoin. So I would tell people be a little bit careful. but if it does have another peak, that's where you get this 500,000. I mean, that would be the biggest momentum thing ever. So I don't know. Where does it go? I have no idea. I'm always looking, since it started making this move closer to 50, my mind has always been looking at that 14 to, call it 12, 13, 14, the teens, 14 to 17,000. And it feels like that would be the most pain. Keep it there for a little bit and then run. So that's my only, just from watching it, I see how volatile it is and how it's going up and down and shaking people in, out, buying the dip, getting clobbered. It's tough on this side. So go ahead.
And we also posted a couple of articles that we saw in a video that was talking about Bitcoin.
Oh, tell them about that was a great video. Great video. And they referenced these
two articles. Yes,
you had me watch the video. I thought it was really interesting. And then they referenced, these are the articles that he references. I think is, look, nobody talks negative about Bitcoin. I'm not trying to talk negative about Bitcoin. I'm simply here trying to tell you there's two sides of the equation. You know, there's people who are buying it and selling it all the time, all day. So every time you see it go up, somebody was selling it as it was going up. It means they're selling it at higher prices when there's more buyers and sellers. But there's two sides to the story. And the video that Marco showed me over the weekend was pretty interesting side of the story. I did hear about it. It has a lot to do with Tether and the stable coins, and maybe it's a little bit of a fraud, maybe not. I read it. What I think that you should do is look at the video and pull the facts out. Like, what are actually the facts? And again, once you pull the facts out, forget about what this guy is saying that he actually just got out. He's still long a couple of the coins, but forget about that. I like the facts, and then you can go dig into more of the facts. And this is one of those articles that, again, digs into the facts. So the facts seem interesting, you know, and some of these Tether coins, the Tether coin, and you know, the fact that it's in, you know, I think it's the Bahamas or, you know, one of the Grand Caymans. It's a little sketchy to have all that money flowing through some account there. There's a little sketchiness to it when you hear it, and it should make at least anyone involved dig into it more and really get to the bottom of it if they can. Okay, yes. So that's one thing. So that's Bitcoin. The other thing I wanted to show people is that we continue to look at this SPY. It has not really moved much. It looks like it's moving much, but it has not moved much in the last let's call it 8 weeks. But we keep looking at this 416.5, 416 range for whatever reason. You know, we're looking at this right between here. This is the level. Above it, it seems to trade well. You know, you get this push up to 422. Below it, you see it's dangerous. So you know, if it gets below it again, you probably want to lean against this and kind of play this game. 410, we'll look down below. We'll look at 410, 405. But I think, you know, you got to start. It's trading so well here today that you got to start thinking, you know, does it want to try to recapture this 422.5 and kind of push up? You have a big move here from 405-ish to 418. That's 13 off 414.70 would get you, you know, 227, 228-ish. So you start, you know, is that the next move? Is that what they want to do? You got a big number, economic number coming Wednesday, I believe. And so this is where we are. It's very bullish from what I see. The big names, Facebook, Microsoft, Tesla, they're all looking strong today. There was an interesting, Goldman Sachs had a hedge fund survey that I thought was interesting. 807 hedge funds were surveyed. 27%, Marco, were long Facebook. And of the 27%, 57%, so a large 6 out of 10 that actually own it, have it in their top 10 positions as a top 10 position. So it's almost like if they own it, they love it, right? They want to get big in it. I just thought that was interesting as well, because we've been following Facebook here. We've been seeing people buy it, not just the momentum guys, but the value hedge funds, both. That's what makes it really interesting. Now, barring a you know, government going after them for monopoly activity, you know, people love the name, and the earnings, the last earnings were great. Again, there's this risk, the privacy, but all that is going, you know, further and further away with time. Eventually earnings keep on coming out and they're killing it you have that going on. So we've been seeing call buys in Facebook. Facebook is one of my favorite stocks to look at, and I like it. I think it's good. The other big names in the news today is space.
Yes.
So they had that rocket launch that was good. People got long the stock on last week. Thursday, Friday, they were getting into it. End of Thursday, all day Friday, and then today they had some good news. The rocket, I guess it's the first or the fourth, was good news, and there's still people buying calls. You have something in space. I think you had said that we had which ones?
Some call buying in July, I think.
Let's see here. July. Yes. Okay. This was it. So July. Higher ups. This was a little nutty here when I saw the 38. Someone's been buying these basically in the morning here and again right around the afternoon here. It's up there. I mean, it's up there even after launch. The volatility. You see the volatility here today is going to come in because of the launch. So you take that risk out. But this does look like a buy here, bidding for these calls. Buying them basically throughout the day here for the most part. Bidding, buying. Volatility has been trending a little bit higher. So I thought this one was interesting. I mean, if you look at the chart and you ask yourself, can it get there? Kind of a silly question because the thing is space. The thing is right here at the 50-day and the 200 days, 26.45. I suspect it's going to try to hold this. Really what you're looking at here is you want it, if you're bullish here, you want it to be, this is a big level, right? It's just call it right around this level, right around here, which is about 24. You want it to hold 24. You really want it to hold 24.91, which is a 50-day here today. So maybe 25-ish. That would be bullish. Get it to 26.45 tomorrow, next day. I mean, you could see this. You see how it's going. Step one, step two, trying to get back up to sort of these levels. It was at 60. Let's call it, it went from 62 down to 14. So that's 48. 48 divided by 2 is 24. So Fibonacci, 50% retracement. So that would be 24 and 14 is 28, right around here. Breaks through that, I would say resistance. Somewhere around 28 to 30, you're going to see some resistance because you got to break 50 to 200 and then should sort of, remember the 200 is like a magnet, right? It comes up to the 200. If it goes through, it comes back down to the 200. Is going to be a magnet, I suspect, for a little bit of time. So it's going to find its spot until whenever the next launch is. I would be surprised to see it just run straight through right to 40 over the next, week or something, 2 weeks, or catch that momentum again. So that's just, but good volume here. You see volume Thursday, Friday, and now on Monday, it's all good. So space looks like it wants to try to go back to space. Let's see here. What's the next one we got? How about this one? How about just one from last week that we were looking at? Again, it's this 10-year lottery ticket, but we were playing, looking to play a sort of a 1 week type of look on the name. This name was up on, we were talking about it here last week, and we're talking about next week and the amount of sellers that insider selling that there might be. And you can see the stock's been fairly weak for 4 days. So some of this stuff like, let's just see over here, QS. These May 28, 30 puts, the 30 puts were $2 last week. They traded close to $5.70, I think, today. So $2 to $5.70. And then we were looking at also the June 25 puts were, where are we? June 25 puts here, about $1.50. They traded up to about $3 today or so. So, I think, and then there's 17,000 open interest. I don't even think that there's, not sure if I didn't see this morning whether or not there were sellers yet or any talk of selling. But, if that hasn't happened yet and they come in and by the end of the week, who's to say you can't see below 20 here? So this is something to keep an eye on, something we spoke about at length last week. And we're looking for the event, which would be insider selling this week. So QuantumScape. That's the second one. What about these names? You see these names today over the weekend? So this was incredible, right? This is we're talking about these over the last 2 weeks, like they're popping up, put buyers, take a look, and then it gets dropped. And then Prime Minister Xi comes out this weekend and says that they were going to regulate these online, online educators need more regulation in China. These things get killed. I mean, I sent you an article on, do you have these? Did you put these up for people?
Yes.
So, one is in China, big investors have brilliant timing, or do they know someone? So this was a research done in 2017-18, and it basically scanned millions of brokerage accounts of the wealthy in China and found that they had very, very good timing, very, very good timing. Okay, better than anybody's ever seen good timing. So, it's clear that there's been a culture of insider trading in China. But I also gave another article too that in February 2021, the Chinese government is really trying to curb that activity. Not saying that they're punishing the guy who actually makes money and uses the insider trading, but what they're trying to do is make it difficult, or at least try to prevent the guy who has the information from being a tipster. So the tipster gets in trouble, not the trader. So if you get a tip, you can go freely trade on it. The responsibility is left to the tipster.
Wow.
China is basically saying, we're not faulting. We don't know how the trader, we won't know how the trader got the information. But if we get the tipster, we know he had inside information. It's a pretty interesting take on it. To some extent, I like it, right? You really, there's two parties. If the tipster happens to be the trader, then he gets in trouble. So you really just focus on the tipster, and you basically make the punishment very high on one. So he doesn't actually go tell anyone, because everybody's going to make money except him. So you kind of prevent the human nature of the whole thing. But if the guy trades on inside information, they grab him, say, where'd you get it? And he gives up the tipster, then the tipster goes to jail, and the guy who traded it makes all the money.
Wow.
So I like to think Chinese are smart. I like that thing. It's almost like, someone who Chris Rock, the comedian, said, you want to get rid of, murders, by guns, murder by guns. Don't forget, you can give away guns for free. Keep the bullets. You know what I mean? Keep the bullets under lockdown, or make the bullets worth $1,000 a bullet. You'll see how fast nobody's going to be shooting people and spending $1,000 per round. But I just think that the logic is good. Let's get the tipster. Either way, that's why I always give credit when I see Chinese ADR buying. I give it more credit than anything else. It's
right.
It always feels, especially if we're looking at it, it's UOA, it's coming out of nowhere, it's consistent. I give it more credit. It's half the reason why we're in this MLCO. Okay, so we like this MLCO. I got to tell you, just the stock trades horrible, right? It has not traded well. It's under pressure here. But there's been consistent call buying, tens of thousands of options over the course of the last, call it 2-3 months, and they just keep coming back for it. So we're waiting. China's in a bubble. It's its own little bubble, waiting for that thing to open. And I think you could see from the chart how that actually, let's see here. You could see how much it moved when we first got wind that things were going to open up in early February. It went from 15.5 to 23.5 quickly. Since then, China has not opened up this bubble, and the stock is trading off until they sort of allow people just to come in. Basically, China's worried about a backdoor of this thing back into the mainland. Okay, nice. We can't say the word now, apparently. The other thing is the other name that I wanted to look at. So that's EDU, TAL, GoTo. There's activity across all of them. They're still pressing them. They're still going after them. The other name I wanted to talk about today was Roblox. Okay. Mainly because I spend so much money on it with my kids. But, I think, we always talk about the bullish and bearish story of it, but essentially it's a platform for games. They have the software that allows you to build the games. So it's a lot of users that are building these games, and they're allowed to profit from it with the in-game buying. It just came out that Chase Coleman, who's from Tiger Global, has a very large position in this. And Chase Coleman is one of those sharks that you got to pay attention to. So he's long a ton here. They've grown revenues at 100+%. And I think that the idea is that they have to get all age groups involved. Right now, they have a lot of 13 and under. And let me tell you, the 13 and unders, they love this stuff. If my kids could spend all day on this, they would spend all day and not get tired. There's so many different games. There's social activity in it. There's friends on it. They're all playing together. They're exchanging how to win the game, how to build. They're running around mazes. It's pretty incredible stuff. I see it from them. Literally, I have to drag them away to go outside and, let's go kick the soccer ball a little bit. It's very difficult. Oh, their whole brains are just, I just want to get back to now it's like they're friends and they're playing and they're able to buy things on it and dress their character up. And what I see is interesting. And so look, Chase Goldman is in it and it's just breaking through 80 here, a name to watch. They're coming after these options like hotcakes here. They're buying, in June, they're buying this is people buying basically I was seeing up here, the 100, 105, 110. They're coming after those. They were coming after the 90s, 95s on Friday. Let's see, in July, it's just across the board buying in Roblox here as you break this sort of 80 level, right? There's not enough days here to do, sort of do a lot of risk reward, except that, this is probably a level right around here where it comes out in an IPO. And remember, the idea that's floating around is that, Roblox is expensive. It's an expensive stock, and it is an expensive stock on valuation. But when that's clearly out there and the stock is doing this, and then it breaks through on good volume. Okay, so where's the good volume? The good volume is here. The good volume is here. And now again, it's going to be another good volume day. It's pretty damn bullish. That's pretty bullish. So let's keep an eye on this one. They're buying 100s, 105s, 110s. This is one. If the market, talk about the market coming back for tech today. The market wants to come back for tech, and these names are good. This is one of those names you want to keep an eye on.
Right.
Okay.
Nice.
All right.
Cool.
Good.
But,
Go ahead.
Before we jump into any further, let me ask you a question. There was a question somebody asked about, I think it was AMC related, and it asked about non-publicly traded securities and contracts and OTC and stuff like that.
Yes. So we got that question a little while ago, and I thought it was interesting. So let's just take a look quickly at AMC here, and then we'll answer that question. So the question was, okay, so here's our chart. The question was, does and I don't want to say the name because I don't know if he wants anybody to know that he asked the question, but someone asked the question, can AMC options or options in general trade offline?
Mm-hmm.
Now, there's a lot of people that talk about these dark pool exchanges on options. I don't know what they're talking about. I'd love to, again, dark pools, somebody could explain it to me. I'm all ears. I don't want to understand. I don't know about the dark pools. I don't even understand what that is. But the question is very specific. Can they trade offline? Can they trade on? It's not an exchange. Can they just trade offline? And the answer is absolutely. Absolutely, they can trade offline. They could trade a private contract. So if you wanted to trade, the real question was, can someone get long 100 million shares worth of puts, which would be 1 million puts? Can someone buy 1 million put options?
Mm-hmm.
And the answer, and the answer is, because he was looking at the open interest, he was seeing there's not a lot there. Like, what's going on? I want to understand. And the answer is, of course, someone can buy that, and they can just do it upstairs. So if you wanted to buy 100 million puts or 100 million shares worth of puts or 1 million puts, then you would come to me and say, Felix, I want to buy 1 million puts. And I would say, which ones would you want? We talk through it. And 1 million puts is a lot, especially in this name, which could be crazy. Right. But I would make you a market, or I would say to you, I would sell you those puts at X price. And you could say yes or no, and whether or not that actually, whether or not you like the price, or whether or not you want to go to Goldman Sachs and check the price against my price. And so you might go to, on that type of size, you may not want to know. See, if it's a small size, you may go ask 3 or 4 banks because it's like nobody cares. But when you say 1 million puts in AMC, you may not want to ask 3 or 4 banks. So it's a combination of like, because you don't want everybody knowing. So why do people do this? It's because of that. They want it to be private. They don't want anybody to know what their position is. So what I want you to think about is not that it's on any exchange, because it's not. It's, it's a piece of paper. It's a piece of paper. It's like any contract with a lawyer. It's going to say, I buy 1 million AMC 13 puts, say, out to a certain expiration date, and I'm going to pay this dollar per option or per share, and they're going to say, I owe you X millions of dollars for the premium. Okay, that's it. You sign, I sign, and you know what? We have a trade. And now I take that trade as you take the piece of paper and you say, okay, we own 1 million puts. I take that piece of paper and I put all the Greeks and everything into my computer and everything. So the secondary question was, how do they hedge? How do you hedge that position? How do you? Well, I wouldn't do that trade unless I had a locked up borrow. So I would have to go before doing this contract. And for me signing, remember, once I sell him those puts, I actually have to go out and short stock against my position. So that means I have to have the borrow. So I would have to go check the borrow, make sure the borrow is locked in, make sure the borrow is locked in for me, because I'm trying to protect me. And I don't want the borrow. I don't want somebody to call me up in a month saying, borrow's gone, I need my stock back. And then I'm squeezed and the thing goes up. So we have an expiration date between you and you say January 1st, 2022. And I say, okay, January 1st, 2022, let me check the borrow. I call up, if I'm at Bank of America, I call up Bank of America's loan desk and I say, I need to borrow or have access to 100 million shares. The guy's gonna be like, what? What are you talking about? 100 million shares? Where am I gonna get? Well, let's figure it out. Let's figure out, can I get 70 million shares? Right. And they start making their calls and they literally start pulling it together. That's going to come at a price. It's not going to be cheap. It's going to come at a price. So when I get that price, the guy's going to say, I got you 75 million shares. Does that work? Maybe it works. So I get 75 million shares. And then the next question is, say, how much does it cost? And he's going to say, it's going to cost you X percent or X dollars per year. You want it for the next 8 months and it's going to cost you X dollars. I'll say, okay, now that X dollars, I have to, because it's a cost to me, I'm going to put that into the price somehow. So the option price is going to reflect my cost, potential cost on the short, if I need that short. Okay. Now, what I do with my guy internally is say, lock it up, which means get a contract. Now you get a contract with whoever owns the 75 million shares. You have full contract. I got a contract because I'm protecting myself, and he's going to make that contract. He takes his vig. I'm going to pay, but now I'm locked in. Nobody can take these shorts away from me. Okay. So now I come back to you and I say, I'll offer it to you. I'm good at that price. And you say, fine, I'll buy it. Okay. So now we got a trade, piece of paper goes away and I'm sitting in trade. Now I take that piece of paper and put the details in my computer and out comes the Greeks and everything I need. So now I have a lot of, because I've sold it to you, I have a lot of short gamma. I have a lot of short Vega. Okay. And I have to actually get my short. Now on that type of size, I'm going to tell you that I'm not going to just take that risk to get my short off right now. I'm going to do this trade. And as I get my short off, after I sell 10 million shares, then we're going to incrementally grow this. So the contract is going to state as soon as I get my deltas, as soon as I get my short off, right? So that way we do the trade, it goes down. I don't lose, $100 million. I'm not taking that risk. Okay. So this goes on and I have this position that nobody in the world knows about except you and me. And my boss, because he's going to, and that type of trade, he's going to say, all right, hey, we're not doing this, or yes, we are. So that's the private part of the market. Now, what do I do? We know what you do. You just go to the beach for the summer, you paid your money, and you believe that by January 1st, stock's going to trade X. That's what you do. You don't do anything. You did what you need to do. Your work was before the trade where you did the analysis and this is what you bought. Mm-hmm. Me, I made the price on the belief that I could actually take some of that risk that this piece of paper has. I'm going to take some of that risk. I'm going to go into the market and I'm going to actually, because I sold puts to you, I'm going to have to buy things back in the market. I'm going to buy things that maybe have a little gamma. I'm going to buy things that have a little bit of Vega because I'm short the gamma and I'm short the Vega and I need to buy some of that back. That's the risk. Okay. So I'm short gamma in the long run. 7 months, I might, maybe I'm short 1 million options in January, but I can buy maybe 20,000 gamma in maybe like July, and that could offset a little bit of my gamma because there's more gamma in the near-term options. So I'm actively in there looking for things. Now, I could buy the same puts January, mismatch in the dates a little bit in 2022. I can go buy those. I could buy the same puts that I just sold you, and I can just, if I sold them to you at $3.50, $4, and I see them every day, I can buy $3.30, $3.40. Yeah, I can do that every day, and I can definitely do that. I don't have to buy puts. Everybody thinks, I just have to go into the market to cover and buy puts. I don't have to buy puts. I can actually, because options, the Greeks are, they don't care about the direction. I can go buy calls. I can go buy puts. And in fact, I might be able to actually buy some of this upside call because my risk may be really to the upside. And so, I have this, remember, I'm stopped out. I sold you these puts. They're stopped out at zero. Can't go further than zero, but the stock could go way up a lot. So I might go in there and buy a little bit of these upside calls. How many? Well, if I'm short a million options to you, I might buy 25, 30, 40, 50,000 options as best I can, and I'm not going to do it. I don't need to do it today. I can do it over the course of the next 3 months. Obviously I would like to get it today, but you have to massage it. You have to remember, I got to go into the market to buy it. Who's going to sell me 10,000 of these calls? Who's going to sell me 30,000 of these calls? So what do? I need a seller. So I go let's go see who's I know a large holder is BlackRock. So I'll get on the phone with BlackRock and say, you're long, however, 75, 100 million shares, whatever they're long, 200 million shares. And I would say, hey, why don't you sell the 28 calls? So why don't you sell the 29 calls to me 30,000 times? You see that $3? I'll pay you $33, 30,000 times. BlackRock says, damn, that's a lot of money. The stock's only 13 at $30. It's got to double. And so that's the game. And that's how Bank of America, Goldman, from the inside, they play it. They're not going to they don't tell BlackRock, we're short, I'm short. They go to them and say to them, it's a great trade. You long this AMC. Why don't we just sell some of these, and be like, yeah, it's actually pretty good. You get 20%. Yeah. Why don't we sell 20,000? Yeah. Why not 50? Because I need, now the street's not telling those people what we need, but that's what the salesperson's doing. They have the relationship and that's the game. The game is managing the risk that I'm taking down from the big players. And where do we get that risk? I sold options. I need to buy them, and I'm going to buy them from someone like a BlackRock or Vanguard. Now, there's not that many people left that are owning chunks of the stock. Right. What's amazing about this story, and what I'll tell you, and why it's increasingly dangerous for anyone who's short, is that look, at the end of the day, valuation is valuation, and the people on Wall Street, they get paid to put out research to make a valuation call. Now, there's a chance in the market. I showed in another video, the market is pricing in a potential bankruptcy by January 2023, 50%. So someone says, oh, you got to short this. It's, this thing could be bankrupt by 2023. If the pandemic, if people don't go back to the movies at the pace they were, double the pace they were essentially before the pandemic to get this valuation. And you can slice the numbers any way you want. At the end of the day, you're going to be right that it's probably not valued where it is right now. Now, the flip side is it's trading where it is right now, and it's trading hundreds of millions of shares. So the market is speaking, and it's saying it's trading there. If you want to short it, be my guest. And I get what you're saying, that it might be this in 2 years, but it's actually trading there. And you always have to, I always say you got to respect something that looks silly, right? It might look, this is silly that it's $13. It's silly, but there's 100 million shares trading today. How silly can it be? What is everybody thinking? So you look at it and you read an article saying that they own 3 million shares, that 3 million people own shares. Different people own shares, very little institutions. The market cap of AMC is only $6 billion. $6 billion, 3 million people. If each person has $2,000 worth on average, then you have $6 billion right there. And that's pretty incredible. Now, you look at the top couple holders, and they have it looks maybe $1 billion, that you don't know. That's BlackRock and the Vanguard. Those are indices, ETFs. It's not active traders. So, I think the big institutions, there's not many of them that are owning this thing thinking, I'm getting great value here. This is a great stock to own. I think you're getting people who are willing to play. You know what? This thing is, this thing is not going down. It's likely the next move is going up if that's what's happening. So people are taking a shot at 9, 10, 11. If it's not going down, now they're stuck here at 12, 13. So it might be the case with just, they call themselves the apes. If the apes own this stock and they're going to hold, just like they hold Bitcoin. And we always say this is the dangerous part of this game for the hedge funds. Just like they hold everything, if they hold, the game now becomes that next $3 billion, right? That next, or $6 billion. Can they get people, the shorts here? Because there's shorts in the name. Can they get those shorts to cover up higher? Can they push it high enough? It's going to need a thrust. Now, I'm looking at it. June 25th is F9, right? Fast and Furious.
Yeah.
Huge opening in China. What's going to happen in the United States? The beauty about this story, which is an incredible story, is that 3 million people here, 3 million people own the stock. If all 3 million say, we're going to go to the movie theater, we're just going to go take out families and everybody just blow it out. I mean, that's a positive thing. So I don't know. I have no skin in the game. I'm here reporting what I'm seeing and trying to give an educational part to the story. But that's what we're seeing. The answer is yes, there could be private transactions. No, I don't have to cover. Buying puts, the same puts. I can cover calls. So it makes it more and more difficult to figure out,
right,
why these calls are being bought, why this is being sold. It makes it more difficult. The other thing I want to show you is that's new now is this is Melvin Capital as of 3/31. Obviously, in the first quarter, he had a lot of problems. If you look down here, you can see his whole portfolio. Okay, so we can go see his whole portfolio and see what he did while he was in trouble. Okay, where he was.
Right.
It's almost like you can look to see, oh, these must have been his best ideas because he is holding these and he's gotten rid of a lot of other things. So you can go there, but at the bottom, usually with Melvin Capital, you see his puts, right? It's all the longs, and then you see the negatives, the puts, and you can see that he actually got out of First Majestic puts, AMC puts. You can see there, ADT puts. You don't see any puts. You see all these zeros. These are all he exited out of everything.
Wow.
My gut is telling me, right? So all of a sudden his portfolio is just longs. You can just see his longs. So my gut is telling me that he has learned his lesson. He doesn't want to show people what he's short. And so he just went and did everything OTC. Or now from now on, he might just do everything OTC. So the good news is that he probably got beat up. So you beat him up. The bad news now is that he learned his lesson, and now he's not going to show you what he's short. You're not going to see what is short because he's going to actually get crafty and go private and just say, I'm going to do these private transactions with one counterparty, probably like a Goldman Sachs. And that's it. And that's what I want to do. And I don't want to do anything else and whatnot. So that is the complete story to the private versus public, how it's hedged, what goes on behind the scenes. And it's a continuous story, right? Because if I have this trade until, like we said, January, then each day I'm actively out there trying to help my position by getting stuff cheaper than where I had sold it to you, the million shares. Okay.
Wow.
Is that fair?
That was great. I love it.
Okay. Hopefully that made some sense, and we'll
if you guys like
more questions.
Yes, definitely. Like the video.
Good.
Help us out and help more people see this. Cool. What else you got?
Good. So let's see. We've been talking about Boston Scientific. The stock has, let's take a look at the stock here. So the stock, they've been buying calls, and this is repeated calls now because they've been buying calls for probably 3-4 weeks. 3 weeks. They were buying calls here right after the earnings. Let's see this. They were buying calls here right after the earnings. They bought calls again. I believe it was here last week. We saw it somewhere right around here, maybe here. And now they're buying calls again today here. They're buying the 44s and the 45s. So we're talking about this level. You can see here that 42 sort of went through, held. The 50 days moving up. This is moving up. It's constructive. To me, this is a constructive looking chart. Let's look at save changes. No,
yes,
let's look at
In the meantime, they actually bought more, so
Yeah.
now you're going to see.
Oh, they did. Wow. Okay, so here you could see that this is going back several years now, and I don't know. They're in medical supplies. I don't know what the event might be here, since they just had earnings, but maybe people like the earnings and big money's just starting to get in. But this is going back several years. Okay, several years, 2020, 19. Stock was having a nice run, and then with coronavirus, had this drop. It's been climbing since, and they're buying these calls right here. It's like a little kid here. Okay, so they're buying right in this spot calls to see it blast through the highs right here. Okay, so I think it's interesting. Let's take a look. The 45s, 44s, and 45s are what they were buying today. And I think it's worth a look. These things are, see here, 9,000. They bought more. So they're not doing a 1x2. I can't imagine they're doing 1x2 for $1. That it seems a little silly. Let me just try these spreads for a second. No, okay, that would be silly. It looked like these were being bought today. They were paying up a little bit, and now the vol just came back up a little bit again. So they've been buying these and the June 45 calls, and they're also buying these. They've been buying these all day. So they're buying both here, and they're buying in much bigger size now than they were before. They have been buying, 4,000 options. So, and that's what you like to see, right? They were buying back in the day. They were buying when we saw it after the earnings. They were buying 4,000 options. I think last week they were buying another 4,000, 5,000, 6,000 options, and today they're coming in, and you see it's a lot more. So, interesting development, something to watch. I don't know what the catalyst is. That's what we'd have to look at next. Like, why right now? Why is Boston Scientific going to zoom right now? So that's something to look at. If anybody has any help there or answers, I think that would be interesting.
Steven says the early June there's a presentation at Bernstein conference. So that's
there you go. There you go. So let's take a look at that. Well, then I'm going to look at that and see. I'm also going to read the earnings transcript to see if we can learn something new there in Boston Scientific.
Cool.
What's another one? One more. I would say, go ahead. You had something?
Twitter, or was it Twitter? I think.
I would say, you know what? I want to look at something here. I want to look at. I think again, we're going to keep looking at this.
The Tesla.
We're going to keep looking at this Tesla trade because it's interesting, and I want you to see. Right, we're doing these 1x2s. We're not going to spend a lot of time on it. The stock is really strong today, but so is big tech. But I wanted to at least look at how this trade that we did in June is trading today. It was a short trade. We were thinking after earnings it was going to trade lower, and it did trade a lot lower. We saw last week it was going up. It was around $25 last week, and the stock is now up $40, $50 from last week, up 50. We have these 1x2 put spreads, and we can look here that they are, we could just see 12, let's call it 12, 12 and a half, and the 640s are 52. Okay, so let's call it 52 and 12 and a half. So 12 and a half times 2, where are we? 550, 12 and a half times 2 is $25, and $25 from 640 is 27 and a half, 20, it's 52, they're $27. So with the stock up $50, the 1x2 put spread is actually up a few bucks.
Wow.
Okay. So I think it's important to just let's keep following this to see where it ends up and how it works. But you see that with these, even with large moves, that the option structure that we did is it's actually gone up, even though we were sort of thinking had a negative bent to the trade. I think it's important to see, and it's important to understand that strategy, because in situations like Tesla and big stocks that they have high vols and it is whippy, I think there's decent opportunity to make good money on stuff like that. To do that trade, you do need a lot of capital because you have to post for the short put that you're short 2 puts versus 1 long, but you're giving yourself that spread. So the 1x2 there, I think actually We paid $7. You know, we were paying $7 for that. So it's trading 27 now. So something to think about. I want people to continuously see, even with the stock moving up and down, how this spread, these 1x2s trade. And it's something that not always, some of the big guys do these types of trades every once in a while. Like they do the 1x2s on the upside, they do the 1x2s on the downside. So we had seen the 1x2 calls probably about a month, 2 months ago. Right. Okay, so that's something interesting to look at. So that's Tesla. What else? We're seeing. I have seen some other stuff in this in the UOA, and that is something like Home Depot overwriting, though. People selling options. So they're selling, which is give you a little bit of a clue. We were talking about how Home Depot wasn't trading great. Lumber prices have come off from the highs a lot. They're selling the 330 calls in July at $4, which, let's look at Home Depot. It's had a monster move higher. And let's go over here. We're looking at this here and this over here. Okay, this little, let's call it flag, if you will. Okay, so you got this flag and breaks down here, comes back through, goes straight up. Obviously 340 is a level. Somewhere around here, there's something going on. You see that there was a seller right here, 328. Buyers obviously here after earnings. Again, they pushed it back. They pushed it through, down again, 328, 3 days in a row, 327, 328. And then earnings holds the 50-day. And you're seeing someone sell here, right? The 330s. He's selling a lot of calls. This is, again, I suspect it's like a BlackRock type of move. They own a lot of stock. They're going to sell some calls and probably in the process of selling a little bit of stock. So just like we did in it doesn't mean the stock is going to get drilled or anything like that. It simply means they're taking a pause here. The market's got to digest this move. They're going to, can it shoot straight up? Of course, they're selling 10,000 options, which is 1 million shares. They're probably long 20 million shares. So little by little, just taking little bits off and probably reducing the size of Home Depot at that level. Okay. Right. So I don't expect Home Depot to just rock it, because I expect a big player, whoever's selling these calls, and there's a lot of people, I'm not saying it's BlackRock, but whoever's selling these calls is probably out there saying, this is like free money, because over the next 6 weeks, anytime it gets up there, we're just going to keep unloading, 5 million shares, whatever it is. So it'll be tough for the stock to get through there. That's how they think. That's why they sell calls. Okay. Right. And this is the strategy they're using to sort of take some premium, because they have a really good idea that the stock is not going to get above 330. And if it does, they're happy anyway, and they're going to sell most of their position. Okay.
I see. Okay.
All right. So just keep that in mind there. We're also seeing the same thing in CVS.
CVS. Yeah.
Last one, to give you an idea. So if you're long any of these names, understand that it's likely these guys are peeling off a little bit. Not completely getting out, not trying to dump a stock. When you're selling calls, it's just simply looking at it and saying, you know what, time to sell some calls, take in some premium. And you know what? Again, doesn't mean that the stock is going to crash. It simply means that they're probably letting go some stock at the high. They're selling CVS. CVS 100 calls at about $1. So they're selling these. So they're selling the 100 calls $1. They're probably sellers of stock as it goes higher. Maybe they're even selling a little bit here. So keep that in mind. Again, this is coming off of a 76 base flag right around here. Okay, let's just call it 67, 76, zoomed up to 87, and now it's trading 90. So, up here, CVS, it's had a big run, might take a break. So if you're involved in options, the way I think about it is maybe this is time to take a little bit of break.
Right. Okay, cool.
Okay.
Nice.
Good. Any questions?
Let's see.
How about the story I owed you from last week?
Yeah, I mean,
maybe.
Why not?
Do
why
that?
not? It's a good
Unless
one.
There's
Yes.
a question. All right.
You gave me a little bit of a preview. Yeah.
So we were talking about Apple. We were talking about Apple and app. We spent the last week talking a lot more about risk reward as we're walking through these things. And we're always on the podcast talking about risk reward. When my boss used to interview people coming through the door to see if they would work, he would hire them. One of the questions he would always get people saying, he'd say, what's your favorite stock? What's the stock that you've made the most money on? Most people would say, he would always come back and say, another Apple guy, people making all this money on Apple. And he would ask them a very specific question. And that was, what happened when Steve Jobs was announced that he had cancer and he was possibly going to die and whatnot? Like, the stock got drilled and it went down. Like, what happened? And it was almost a trick question, because eventually the stock obviously came back and roared, but the stock was down almost 50% into 2008, 9, and whatnot. And if you didn't say that you were selling out of it or that you were actively doing something, and you just said, some people say, yeah, I bought more, I took the opportunity to buy more at that level, he basically would not hire them. He'd say, thank you, whatever, but he wouldn't hire them. And the reason he wouldn't hire them was because they didn't understand the hedge fund business. They didn't understand his role. And he wasn't going to be holding Apple for the next 20 years. They'll hold Apple for a year, 2 years, 3 years. But when they find situations where the stock might go down 50%, they're getting out, right? They're trying to hedge that and get out. And the way he got me to understand it very quickly, right? Because I was always, yeah, you're reducing whatnot, but he wanted me to understand the logic. He would basically say, what they don't understand is that there's no business anymore. We're not in business. Scoggin is no longer in business if the stock goes from 200 to 100. Yeah, I'd love to buy everything as it goes down and keep buying and hold forever and let it go. It's not what they do. Because why? Because they are beholden to their customers, investors that give them the money. And those investors can pull their money at any time. So what he was trying to say and help me understand was, they're always competing, not necessarily against the market, but against the next hedge fund that can take the money. So performance was going to matter, because if you don't perform well and the next guy performs well, the money leaves you and goes to him. And if all the money leaves you, there is no business, right? And so he would say, he was trying to help, every once in a while, he'd say, yeah, trying to tell, he'd get frustrated. Just, they don't understand that there's no business. There's no business if everything goes down 50%. And we don't have money to buy. We actually have to sell. So they become a forced seller. Hedge funds, if you're thinking that way, you become a forced seller, because the money, the investors are going to pull, and they're going to go elsewhere. When they pull, that means you have to get out of all your positions. And you're there sitting there going, yeah, but it's 80. We want to buy more. And they're like, we just want our money back. You stink, right. We're going to go somewhere else. So, it's important when we talk about risk reward. That's why it's important. And it's important to understand that, yeah, a stock may go from, someone shows me their portfolio. They have $100,000. They have a $500,000 portfolio. They have $150,000 in one stock, and they love it. And they say the stock's going to go up for the next 10 years, and it's down 60% already. And it's like, it could, but you might be out of business. What if everything comes down further and everything else? You don't want to be out of business. And so it always stuck to me. And I always, I would impart that to you, that that's slogan. You don't want to be out of business. So that's why you're looking at risk reward. That's why you're looking at the downside. That's why falling in love with any one stock could be dangerous. You want to have that. You want to size it correctly. You want to have the risk reward. You want to understand what it is, what the risk is, and what the potential reward is, and then you want to actually go according to what the plan says. Because if it's down 50%, the market is telling you that right now you're wrong. Regardless of whether or not you're right in 2 years, right now you're wrong. So that's the story, and it stuck with me for a long time, because every time I talk to someone and they say a name that has went from up, down, or Bitcoin,
right.
it went from 1,000 to 20,000 back to 3,000. And when people say they're long, I say, well, how much do you have? Oh, I have my whole life savings. What did you do when it went from 20 to 3,000? No, I'm holding it forever. And it's dangerous, and not saying that it doesn't, hey, the people who did that, it went to 60. Now it's at 30. What do that same thought has to appear with everybody losing 50%. What's the plan? Like, when do you say, hey, I'm out? I've seen people take winnings go from, this is in the .com bubble. I knew personally a guy who was offered $400 million by Amazon. I believe it was Amazon at $400 million, and said no, cash. and said no for his company because he thought it was going to be worth billions. And eventually they went bankrupt in 6 months when the dot-com crashed because they didn't want that company anymore. And the guy's a brilliant guy. He's actually just made a fortune on crypto and other things. Won't mention his name, but he's a brilliant guy, really smart guy. But again, it's like, at some point, he's offered 400 million. Damn, do you take it? What happens when it goes to 200 and then the doors close because the crash came and nobody sold? So, there's a lot of this I see going on right now where the mind is going to play a lot of tricks. You're doubling down on Bitcoin here. You're doubling at 20. I'm using Bitcoin. It could be any one of these mountain stocks. You double down, triple down, quadruple down. It goes up. Now you're excited. You don't take the profits. It goes down more. The mind starts playing games. So it's very important to have this plan and understand what you're doing. And even you see this Bailey Clifford, they sold some Tesla, and his reasoning was it got so big. I just made 6 times my money, and it's now 30-40% of my portfolio. I'm just trying to sell it so I can get back to a normal portfolio.
Right.
And that's good risk reward. So, as much as I said, hey, there's a seller of Tesla, he's doing the right thing. I mean, he's supposed to do that. It's otherwise his fund is just Tesla, and that's not what these guys want. So risk reward, that's what this podcast is about. That's what we're trying to bring. So I'll leave you with that. We'll cut it 4 minutes early, unless there is something here that we can look at.
Cool. I like that. Guys, make sure you like the video if you enjoyed it. Check out the Skillz video. Check out the video Felix made about 6 steps. And also, what was I going to say? Oh, yes, there was a question about, but we're going to do that next time, so just so people prepare. Volkswagen short squeeze, if you have any experience from that, we would love to hear that.
That's another good one. We'll do that tomorrow. Let's do that tomorrow. That's a good one.
Cool. All right.
That's a good one.
Awesome.
All right, good.
All right. Thanks, Felix. Thanks, everybody.
All right.
See you tomorrow. All right. Bye.